So I always like to start off the class by asking you guys, do you have any questions? Is there anything that came up since I saw you last? Maybe you tried a homework problem and you struggled. Maria was mentioning that she worked on the exercises from class yesterday, and although she said it took her a little while, she did get it right. And when that happens, you guys should high five yourselves and give yourself a little reward, because accounting is not easy. Maria mentioned it's like a foreign language in some respects, and I think that's a good analogy. So last time we were here, in fact, we said that accounting is the language of business, and sometimes it is like being in a foreign country and learning a brand new language. And so no one said it was easy. I'm certainly not saying that it's easy. Accounting and economic classes tend to be the classes that are more difficult for business majors. So please, please, please ask those questions as they come up. So does anybody have any questions, or did they get stuck on anything if you tried the homework? Okay, if not, then we'll continue on. I'm going to share my screen. Remember that Giselle is not in the classroom today, so sometimes I miss the chat room comments. So if any of you would help me out, if you see things being asked in the class and I can't see them, you can just unmute yourself and pass that along. I would appreciate it. I don't want to ignore anybody's question. It's just that I lose track of them when I share my screen. So by now, I hope that all of you are on Connect, that you have taken the time to register, and that you completed your first assignment by now. If not, then you missed out on some points, but more importantly, we need to make sure that you have access to the Connect site. So if you're struggling with doing that, I need to hear from you. I've been in my office since 8 o'clock this morning. I have office hours every morning. All you guys need to do is click this red button that says office during my office hours, and you'll appear in front of me. Okay, then hearing that there's no questions, here's our schedule. I hope by now that this is in the front of your binder. Let me make it a little bit bigger. We're going to spend our second and last day on chapter 2. Some of today will be a review of what we covered last time. I don't think you can ever practice too much with this fundamental accounting equation. So we're going to start off our morning by doing one more problem that emphasizes the expanded accounting equation. And then these last few exercises are going to deal with the financial statements. And just as kind of a recap, I did send out an announcement this morning. But just as a recap, because you guys are probably in your first accounting class, I just want to, again, emphasize that preparing for class is key. A prepared student is going to be a successful student. So when I say prepared, that means that you should strive to read the chapter prior to class. And accounting is a subject where you just can't kind of come to class, learn it, and go on. So read the chapter prior to class. Consider taking notes. I did send you guys out this morning an example of what my notes would look like from chapter 1. If you're a visual learner, you might want to view the PowerPoints also. And that means that you come into class with any questions that you encountered while you were preparing. Any questions so far on what being prepared means? Okay, then after the lecture, I would go try at least part of the 10-point homework problems. Remember, on those homework problems, you have the option of using that check my work button as many times as you need it. Some of you may use it once on an assignment, and some of you that don't quite feel as comfortable might be using it, several times on one problem. Whatever you prefer is fine with me. Remember, Giselle showed us last time that there are hints. And always, we've worked out the problems first. So if you get stuck, go use those hints or go review your class notes. Remember that either Giselle or I will be posting the class notes in the discussions area. So if you fall behind, or I think it was Brandy had a baby interrupting her, or she has to be mom first, of course. Then if you can't finish something, just be assured that those notes are going to be there, that you can go look at those as necessary. Reach out for assistance if you need help. After that, once you got the 10 points of homework done, definitely go try those Learn Smart problems. Those Learn Smart problems are not due until the day before the test, sometimes the day of the test. But don't wait to do those. Do them, build them into your study regimen. I think it's critically important. Somebody asked a question about me last time as a student. I block out 2 to 3 hours of time several times a week. And I look at it almost as if I look at it at a doctor's appointment, right? I would not miss a doctor's appointment if I took the time to set it up. So I look at it as an appointment with myself. And during those couple of hours, I try to keep myself in a quiet room. I know that that's not always possible, but that's what I seek to do. And I try not to let other distractions disturb me. In fact, when I'm studying, my cell phone goes outside the door, so I don't even have access to it. After that, don't forget that 10-point quiz. There is not a quiz on the first chapter, but there will be on all the other chapters. And then once you're done with that, then start preparing for the next chapter. So just as a reminder, for every chapter except for chapter 1, you have 10 points of homework. You can enter and exit those as many times as you want. There's a 10-point quiz that you get one shot at. That timer starts running, and once you enter that quiz, you can't leave it. And then there's always a Learn Smart. So about 25 points per chapter. So any questions on that as we get ready to tackle today's lecture? Okay. Again, I would be using this schedule as a roadmap. This shows what we're going to do today. We know that chapters 2 and 3 are those foundational building blocks. And again, I think of cheerleaders making a pyramid at a game of some sort. If those cheerleaders on the bottom rung of that pyramid are not strong, if they're not the strongest members of that squad, the rest of the pyramid is going to come caving in. So I can't stress that enough. Chapter 2 and 3 are the most important chapters we're going to cover all semester long. And chapter 3, which we'll be doing on Thursday, is dependent on chapter 2. So we have to invest the time. We've got to find a way to get an hour or 2 of homework in to master the concepts in chapter 2 before we come back to tomorrow's lecture. Because tomorrow's lecture is going to be one of the toughest. I would encourage all of you to try and come to class if there's any way you possibly can. And if you can't be here live, then you definitely want to watch the recorded lecture. And then again, looking forward, our first test is next week. In fact, it's a week from today. So we have to build in that time to practice. Otherwise, and you've heard me use this analogy, if you don't practice, it's like showing up for game day when you haven't done one thing to prepare. You're going to probably strike out, and we don't want that to happen. All right, so the agenda. Again, the reason that I show you these agendas and everything I'm showing you is in the modules link. The reason I have this agenda is to help keep us organized, definitely, but then also as a check on you before the test. You should go through these agendas and you should go through them line by line item. Do I know what a transaction is, right? If you don't, that means you got to get your notes updated. A transaction is an event that changes the financial resources of a firm. That was one of the main definitions that we talked about in chapter 1. And in chapter 2, we learned about 5 different types of accounts. So we'll go over those in a minute. But my question to you would be, if you've invested an hour or 2 of time, could you list the 5 accounts? And could you define what each one of those 5 accounts is used for? Okay, and we'll work on that today. We learned about the fundamental accounting equation, which says that assets equals liabilities plus equity. And then we expanded the equity umbrella to include capital, revenues, and expense. And then, of course, we practice. We spent a lot of times, what I call getting our hands dirty, working on problems. You'll find that I'm a dirty hands kind of instructor. And what that means is there's a lot of instructors. I've been here 30 years and I've evaluated many, many, many instructors. There's a lot of instructors who just like to flash PowerPoints. Okay, to me, although I am a fan of some PowerPoints, it's not until you get your hands dirty that accounting is going to start to make sense. So you'll find my style is spending a lot of time getting our hands dirty, working out problems with you. That brings us to today, unless there's any questions on day one. That's kind of a recap of where we've been. Any questions on any of that? All right, then today, day 2, we're going to review that accounting equation. We're going to do one more problem that reminds us how to record transactions, because again, if we don't understand how to record transactions, then the rest of the class is going to be for naught, and we don't want that to happen. So we're going to spend some more time reviewing the accounting equation, and then the new stuff today, the critically important new stuff today, we're going to learn how to communicate that information to users, right? We're not going to send a user this ugly column of numbers. We're going to communicate our data through the preparation of 3 financial statements. We'll spend the second half of today learning what those 3 financial statements are for, and then getting our hands dirty and actually creating those 3 financial statements. And again, I want to emphasize the fact that these 3 financial statements that we're learning are going to be used in every single chapter going forward. It's how we communicate the results. So I cannot underestimate, or I cannot stress enough that we have to practice. We got to get these financial statements into our memory bank. And the way that you do that is by kind of like sports again. I know I use a lot of sports analogies, but it's repetitive practice, right? I'm not going to learn to hit a ball until I've hit 10 or 20 of them and probably struck a few without hitting them. In other words, a whiff. That happens. And that's what happens when we do our homework. We start off slow. Again, Maria was mentioning that one problem I think took her 40 minutes. And that's how learners start out. But I also told Maria this, that when she does the next couple problems, maybe today or tomorrow, it's going to get easier and easier and easier. And by the time she's done 3 or 4, that 40 minutes is probably going to be cut down to probably 10 minutes. And that's the goal. The goal is always practicing and getting better. So that's where we're headed. That's our agenda. Again, I'm showing it to remind you to use that as a study guide for the test. Can I go back and do those things that my instructor listed that we were going to talk about that day? If there's no questions, then let's go back to our chapter 2 handout. So again, if you're looking for this, it's in the modules link. Same place all of your content will be. And last time we were here, we learned 5 accounts. So if I gave you a minute, could you write down those accounts in the form of an accounting equation? And if the answer is no, it doesn't mean you're dumb. It doesn't mean you need to throw in the towel. It doesn't mean you need to run and say, forget this class. It just means that we got to practice a little bit more. So those 5 accounts, 5 types of accounts are listed here. Assets, those are the things of value. That would be cash. That would be the car. That would be any jewelry that you have. It would be the equipment a company uses. Most assets are tangible. That means you can actually touch them, right? So this cell phone, I can touch this. It's a tangible asset. But some assets are intangible. That means you can't touch them. That would be something like patents and copyrights and trademarks. Those have value to them, but you can't physically touch them. Those types of assets will come up in a later accounting class. Most students don't have a bunch of assets because you're so busy trying to pursue your education that there's usually just not too many funds around to purchase assets. What students can identify with are liabilities, right? Because I call it the starving student. When I was in school trying to get my education, it seemed like I owed money to everybody. So liabilities are debts or money that is owed to others. An important word when you're talking about debts is creditors. Those are the people that we owe money to. So if you were to ask me, who are some of your creditors? I would tell you that I have a car in the driveway that I think I owe Toyota Credit some money on. I have a credit card that accumulates a balance and I hope to pay it off. So American Express right now is one of my creditors. If you have a home loan, you probably have a mortgage. The person who you owe that mortgage to is your creditor. And then the difference between these two, the difference between assets and liabilities is equity. And equity is probably the most misunderstood account type out of all of the account types that we've talked about so far. Equity is the owner's net worth. It's what the owner has after the creditors are paid off. So if you talk about the equity in your car, for example, it would be whatever your car's worth less what you owe on it. That's your equity in the car. That's called your net worth in the car. From a bigger perspective, the net worth of a business is how much the owner has in that business after all the creditors have been paid off. We refer to that many times as net worth. And again, if you read about America's richest people or the world's richest people, it's not the amount of revenue they bring in. They're referring to their net worth. Okay, so we started off with that fundamental accounting equation that's farther down on your handout. It looks like this. Assets equals liabilities plus equity. And we found out on the homework that if you know two of those, you can always compute the third one through some fairly easy math. And then we expanded this equity equation. Once we were done talking about those three kind of accounts, we expanded this equity equation. We called it the equity umbrella. And the reason we call it an umbrella, in the book, they kind of have this thing that looks like an umbrella. And underneath that were three types of equity accounts. Capital, which is the key word for that was invests. So any money or any asset that the owner puts into the company increases his capital account. And then we learned about the two other major types of accounts. Revenues is the income generated by the sale of either goods or services. So I mentioned I'm going to get my hair cut Friday. When I go to that little salon, that stylist brings in revenues every time a client comes in and she performs a hair cutting service or a hairstyling service. Revenues for our first 6 chapters are usually going to be recorded in an account called fees income, I believe the author uses. Expenses are the costs of doing business. They're costs that we have to incur in order to support the revenues. So you guys can relate to utility bills and rent costs and water and telephone charges and all those things that are necessary to keep a business running. Those are referred to as expenses. And notice that minus sign. It's the only minus sign in here. Expenses bring down the equity umbrella. Revenues pull the owner's worth up. Expenses pulls the owner's worth down. And that's kind of a recap of where we left off last time. So that's a lot of material. I love Maria's example of calling it's a foreign language. It really is. So we have to spend the time learning all these new words and all these new concepts. Any questions, you can just unmute yourself. Okay, then we practice recording transactions. Remember, financial events that affect the resources of a firm. We recorded those transactions under this equation, and here's the mental mechanics we went through. We asked ourselves what accounts, notice the plural accounts, that means at a minimum 2. Which accounts are affected? We call that double entry accounting. I'd write that down in your notes. It's a fundamental concept. Double means 2. Double entry accounting means that at a minimum, at least 2 accounts are going to be affected. And I even threw a name out there. Louis Pacioli goes way back to Christopher Columbus times. He's what we call the father of accounting. If you're interested, there's a video on my website of the history of accounting. It probably would be pretty boring to most of you unless you're considering being an accounting major, but it's there if you want it. Then after we decided what accounts were affected, we decided how they're classified. In other words, if I knew that cash was affected, I knew that cash was an asset account, and it goes up when cash comes in and it goes down when cash goes out. And so again, we're deciding whether it's being increased or decreased. We put the transaction where we think it goes. We're going to make mistakes. That's part of the learning process. And then we ensured that after every transaction, that equation had to be in balance. The left-hand side always, always, always has to equal the right-hand side. So before we start the new stuff, which is the financial statements, let's go get our hands dirty and practice one more question related to recording transactions under the fundamental accounting equation. And I will tell you that the question we're going to work on right now is a 10-point test question on your test. So in my notes, I'd be getting a red pen or a big highlighter, or I'd somehow be notating that this is going to be a 10-point test question. So let me bring up the Excel file here. You guys should have downloaded them this morning. I am trying to grab mine. Give me 1 second. Here it is, 2-5. So someplace in your notes, I'm going to put a big notation. This is a 10-point test question. So your test is going to be 100 points, and it's going to be probably around half multiple choice and half problems like this. In fact, there is already a test review sheet on my website for those of you that want to look at it this weekend. We'll go over it probably next week, but it is up there for anybody that wants to look ahead. So let's read through this. It says the business center had the transaction listed below during the month of June. Show how each transaction would be recorded in the accounting equation. Compute the totals at the end of the month. Okay, so they gave us a list of accounts. They even wrote the fundamental accounting equation up here, and we see this equity umbrella expanded. So if you go to the tab next to it, I've set up the Excel spreadsheet so that we can do this efficiently in class. So go to the next tab, and to keep me from having to go back and forth between screens and driving you guys absolutely crazy, I just snipped the information and put it at the top so we wouldn't have to keep going back and forth. So that's where we're headed. When you try this homework problem, you will make fewer mistakes than you made yesterday. So the goal is by the time the test comes around, you can go redo this problem without your notes and not make any mistakes. That would be a wise way to practice for the test. Any questions before we do this? Let me check the chat room just to make sure. Okay, there's nothing in there. Did somebody have a question? Nope. Okay. Let's make sure we mute ourselves if we don't have questions. That way we don't hear the background noise. All right, so here we go. Jesse Campbell started the business with the cash investment. Okay, here's a key word. Invest. When we see the word invest, we know that the capital account is going to be affected. So by the way, this is the first transaction on how any business starts out. The first thing they need to do is to infuse cash into the business so that the business can carry on transactions. And so Jesse Campbell, the owner, the cash is going to go up by 120,000, and the capital account is going to go up by 120,000. To make these numbers a little easier to read, I'm going to change the format. So if you guys are in Excel and you want to change the format with me, this little box right above the A1 cell is called the Select All button. I'm going to click it, right, that area right above cell A1. And I'm going to go over here and click the comma format, because that will show me commas where they go, and no decimal places, because we don't need decimal places in our problem. And that just makes the information a little bit easier to read. If you have a column that's not quite wide enough and you see number insignia signs, you can go up to the gray area. See my cursor switch back and forth between the divergent arrows. You can grab the columns and make them a little bit bigger if you need to. So first one is the same transaction that starts off every business. The owner invested money. Cash goes up, capital goes up. If I were you and I'm a brand new student, I would go highlight in yellow the equal sign, right? Because I want you to get in the habit of always checking that the left-hand side equals the right-hand side every single time. So I don't think I need to have that as wide. Let me go make that column a little smaller, get everything back on track so that you guys can see the full problem. And I think we almost have it. Okay. There we go. All right, so next one. Purchased equipment for $44,000 on credit. There's that trigger word again. When you see on credit, it's going to mean one of two things. It either means that someone owes you money, in which case we would use accounts receivable, or it means that we owe somebody else money, in which case we would use accounts payable. So we got to read carefully. We purchased equipment. That means we're going in debt for $44,000. So how do we do that? Our equipment goes up by $44,000 and our debt goes up. How come our debt went up? We bought it on account. That basically means we're going to have to owe it later. I use the example of going into Home Depot and saying, I need this lumber, put it on my account, right? I'm going to get a bill from Home Depot saying you owe $44,000. So my liabilities just went up. Every time the left-hand side has to equal the right-hand side. So check that. And when you guys have a question, don't wait. It's not interrupting me. I encourage questions. So if I need to repeat something or you want to do something else and it doesn't seem right to you, speak up, especially with Giselle not here. I often will transpose numbers. Call me out on that, please. Okay, number 3, performed services for $6,200 in cash. Okay, I performed a service. The cash came in immediately, so my cash is going to go up. And since I performed a service, I generated revenues, what your book will sometimes refer to as fees income. Revenues make the equity umbrella go up. So both of those numbers would be increases. And hopefully at the end of the month, our business is profitable. We'll talk about that when we're done with this problem. Business owners always want to be profitable. Sometimes we have bad months, or this year in 2020, crazy months where many restaurants and other service-oriented businesses took a dive. But hopefully now that the economy is starting to recover, we'll see businesses start to recover. Number 4, purchased additional equipment for $9,200, but this time we bought it in cash. Okay, so our equipment went up because we have a new piece of equipment, something of value, an asset, but our cash went down. Why did our cash go down? Because we spent our cash to buy it. So you're going to enter it with a minus sign, 9,200. Excel's probably going to turn that into brackets because that's the format I chose. The reason I chose this format is because minus signs are really hard to see on small spreadsheets. Now, this bothers some people. We don't have to use the right-hand side. You notice how the right-hand side of the equation wasn't used. But the reason that's okay is because when we net these two out, we have 0. In other words, our total assets did not change. We just exchanged one asset, equipment, for another asset, cash. One went up, one went down. Our total assets are going to be the same before and after that transaction. Questions on the first half of the exercise, transactions 1 through 4. Okay, then let's do number 5, perform services for $10,100. There's those trigger words again, on credit. Okay, when you see on credit, and this is what Brandy was talking about last time, it was confusing to her, and I understand why, because sometimes they use those words on credit when we owe money, like they did on number 2. And then they also use the words on credit when someone else owes us. So that is confusing. That's what that new language means. So when we see on credit, we need to ask ourselves, does somebody owe us? In which case it would be accounts receivable. Or do we owe somebody else? In which case it would be accounts payable. Well, this one, we're performing the services. So I'm not quite sure what kind of company this is, but we're performing the services. That means that our accounts receivable is going to go up by 10,100. And because we performed the services, remember what GAAP says, you record revenues when earned. We've performed the service, we've earned the revenue. In this one, it did not come in the form of cash. It came in the form of accounts receivable, which means those customers are going to be paying us later. So I'm going to write that rule down, that GAAP rule, just to make sure it's in your notes. GAAP says record revenues when earned, not when the cash is received. We have not received the cash for that yet, but we've performed the service, and GAAP says put the revenue on your books. Instead of using cash, we didn't get any cash yet, the customer owes us money. That's when we use this asset account called accounts receivable. Okay, if you have questions, go ahead and just speak up. All right, number 6 then, paid salaries. Okay, every business, almost every business is going to have salaried employees or employees that we need to pay wages to. That's a cost of doing business. So we're paying our employees $8,900. That means cash goes down minus $8,900. And that means that the expenses go up, right? Because expenses can only go one direction. But the reason that that's okay, the reason that our accounting equation is still in balance, because don't forget, expenses pull that equity umbrella down. So we still balance out. We have a decrease of assets on one side and a decrease in the equity umbrella on the other side. And by the way, whenever you have expenses, I know what's coming up and some of you may not. I would go out to the right-hand side someplace and I would write down what that expense was for. It'll make creating these financial statements later a little bit easier. So I'm just going to come off to the side here and I'm going to type in that that was for salaries. Because pretty soon we're going to be doing financial statements where we'll have to itemize those different expenses. And so just a word of encouragement or a word of warning, maybe write down, just jot a note what the expenses are for. That'll make our income statement much easier. Okay, we got 2 more. Number 7, received $6,400 in cash from charge account customers. Okay, key word. This is money from people that we've already performed the service for. That's what a charge account customer is. So we're not performing any service. We don't want to record any revenue on that one. We're simply receiving some cash that was owed to us. So again, this will be the most missed question out of these 8 on a test. So you want to pay particular attention to it. What happened is our cash went up by $6,400 and our accounts receivable went down because those charge customers don't owe us as much anymore. And I would highlight that one because again, 30 some odd years of teaching, that's always the most missed transactions. So I'm going to just put, watch out for this one. It's heavily missed. For some reason, people want to put that in revenue. If you put it in revenue, you would double count it. Why? Back to this sentence. We record revenues when earned. The money was already earned. It was already recorded. All we're doing now is collecting cash that was owed to us. It was previously recorded. We don't want to double dip. We don't want to record revenues twice. And then the last one, paid $26,000 to a creditor. Okay, there's a keyword. We talked about it this morning. A creditor is someone that we're indebted to. So we're paying off part of our liabilities. How much? $26,000. So cash is going to be minus $26,000. And our debt, which we use in accounts payable, is going down. Why is it going down? We're making a payment against it. And so what we just did is we recorded transactions under the fundamental accounting equation. So before I leave this, we need to do two things because we're not done. We need to foot this, and I want to make sure you guys understand that word foot. Again, foreign language. I love Maria's analogy. It is a foreign language. Foot means add down, and crossfoot means add across. So we need to foot or total this up and crossfoot. And I'll never forget my first day on a job. I was blessed enough to get a job with a Big Four accounting firm. You guys read about those in chapter 1. I walked in dressed to the nines. I had my suit on. I had my hair pulled back. I walked in there like I was hot stuff. And the very first thing that the supervisor told me to do, and that day we didn't have Excel like we have today, he gave me a book, a record, and he said, here, foot this. And I had never heard the term foot. I'd always heard totaled. And I said, what did you say? And he said, I said, foot this. I said, okay. Thinking, foot this, buddy, under my breath. Of course, I didn't say that. But that was a new terminology. Foot means to add down, and crossfoot means to prove the accounting equation out. So I'm going to do this with Excel. You guys can do it with me. And if you don't know how to use Excel, this is a good time to start learning. So equals, the equal sign, it's on the top right-hand side of the keyboard. Sum, S-U-M. Open the parentheses. The open parentheses is above the number 9 key. And then you're going to highlight from top to bottom or bottom to top. I'll go bottom to top. What it is you want the computer to add up. I'm going to highlight all the way to the top because my hope is to copy that formula across. And that will save us the time of having to get our calculators out and manually do it, which we all could do that. But in the interest of time, I'm going to use a formula. I'll make these red so they stand out, and I'll try and make them a little bit bigger so you can see them. That's what happens when I make it bigger. The column's not wide enough. So I got $88,500 in cash. I hope you guys did too. And once I have that first formula down, I can move it across by using that fill handle. I'm going to make this a little smaller. How do you do it? A regular cell selector is a fat cross in Excel. When I move that cursor down to the bottom right-hand corner, it turns from a fat cross into a skinny cross. When you see that skinny cross, hold your left mouse button down and drag it across all the way to the end. Okay, and if you get those dollar signs, it just means that you either need to widen your column or you can make the font a little bit smaller, whichever you prefer. In the interest of time, I think I'll make the font a little bit smaller. And that's what I have. So we have footed our spreadsheet. We have totals for each one of these account types. And now we're going to crossfoot, which means we're going to prove that the left-hand side equals the right-hand side. So I'm going to come over here and I'm going to type in total assets. And either with your calculator or with Excel, you pick, I'm going to add up those assets. 145,400. My goal is to show that my assets equals my liabilities plus owner's equity. Let me stop for a second before I do the other side and see if anybody has any questions. Okay, so I have my assets. I have my liabilities. I owe $18,000. And now the equity, the one that usually gives students a little bit more of a problem. My equity umbrella says take that capital, add in the revenues, and take out the expenses. That will give me my total equity. So you can do that on your calculator, or you can do it on Excel, whichever you prefer. I'm going to use Excel, and I got 127,400 when I did that math with the little umbrella. And if I did this correctly, the sum of the left has to equal the sum of the right every single time. Let's see if we balance. And we do. Okay, that's called recording transactions under the accounting equation. So my question to you is, could you do that on a test? And if the answer is no, I don't feel comfortable yet, it just means that you got to practice it. Once you try that first homework problem, again, Maria said took her 40 minutes. But my guess is now she's come to another day of class. She's going to practice some more homework. My guess is if she went back and tried to do this same problem tomorrow, she could probably do it in about 10 to 15 minutes, right? Because we get better as we practice. Who has questions? Okay, go ahead.
So I have a question. So assets is also divided by cash. Which one are the other two?
So cash, in this case, this company has 3 assets. They have cash, accounts receivable, and equipment. Did you ask about number 2?
No, it's because I came a little bit late. I had some technical issues, so I didn't saw number 2.
Okay, so number 2 says purchased equipment on account or on credit. So that's why we did not use cash here, because we didn't spend any of our cash. Instead, we bought it on account. So our equipment went up and our debt went up, Diego. No cash on that one.
Okay. Okay.
Any other questions?
Thank you.
Yeah, you're welcome. If you didn't get a chance to write those totals down, I'll leave it on the screen for a minute. And then again, don't forget that if for some reason, and again, I know some of you have children at home, some of you might be taking a break at work to look at some of the lecture, but you can't stay for all of the lecture. These files will be posted in the discussion area for you to download to look at later. I'd prefer, if possible, that you guys try and do them with me to keep you engaged. But if for some reason you can't quite keep up, or maybe yours is messy, sometimes mine are messy, you can always go back and look at those downloaded files there. All right, so let me use this problem to talk about how we're going to communicate the results to our external users. Part of chapter 1 was understanding the users of accounting. There's internal users and there's external users. So if somebody like our bank requires us to submit financial results, that's leading us into chapters 2 topics today, which is creating a set of financial statements. So as an owner, I can tell you this, as a business owner, one of the first things I want to know is my business profitable? Right now, some new students, when I ask them that, they'll say, well, let me just go see if I have cash in the bank, right? Cash has nothing to do with profitability. I could go to the bank today and borrow $100,000 and have it sitting in my cash account, but that doesn't mean I'm profitable because I owe that money back. So the next thing I want to talk about is how are we going to communicate these results to our users? And the answer is we're going to do it through creating a set of financial statements. So back to our agenda that we looked at the start of class. Our agenda for today is we're really going to hit the financial statements hard. So the financial statements, I'll go back to my handout in a minute, but it's a set of 3 documents or 3 reports that's going to communicate the results of what happened to the company financially over a period of time. So if we're looking at this one and I asked you, was this business profitable? Because that's something that every owner wants to know. The way you would answer that is by looking at these last two columns, because profitability is determined by the revenues and expenses. If the revenues are more than the expenses, then yes, this company was profitable. I need a nice, neat way to communicate that to users. So was this business profitable? Yes. They brought in 16,300 of revenue and they spent $8,900 in expenses. When you take the difference between the revenues and expenses, you will get what's called net income. I'm going to abbreviate it. We'll see it written out in a second. Net income. When I take the difference between the revenues and expenses, this owner has generated 7,400 in profit. How did I get that number? The revenues are 16,300 and the expenses are 8,900. This business has earned a profit of 7,400. How are we going to communicate that? We're going to do an income statement. That's the first question financial statements will answer. Was the business profitable? And I'm going to go back to my handout in a moment, but I just want to continue this example that's on the screen here. The second thing the business owner is going to want to know is, what does my net worth look like, right? If I was profitable, my net worth should have gone up, because when we're profitable, equity goes up. So the second thing I'm going to show, this is going to be first, we're going to do an income statement. The second thing I'm going to show is called a statement of owner's equity. And it's going to answer, how has the owner's worth changed? And again, we'll go back to the handout on that. And then the third statement, because you know there's three, you saw that in the agenda at the start of class. The third statement is going to show that the accounting equation is in balance. It's going to prove that the assets equals the liabilities plus the equity account. So to do that, the focus of today's lecture, the new part, is going to be, how do we do a set of financial statements to communicate the results of this information? So before I go back to that handout, does anybody have any questions on this problem before we leave it? I hope you've all notated in your notes what I notated up top here. This is a 10-point test question. Someplace I put it, it was probably on this problem. This is a 10-point test question. So you're going to practice that until you feel really comfortable that you can get it all right. Why? Not to do well in the test. I know that's a very short-sighted response, but to make certain that we understand the whole point of what this accounting equation is trying to do. It's trying to keep a financial information system so that internal users and external users can make decisions about their business. So let's go back to that handout. And again, all of this is in the modules link. This is the same handout we used yesterday. This takes us to the topic of financial statements. And remember, back in chapter 1, we said that accounting is a process of recording, summarizing, communicating. There's some other steps there. This is the summarize process and the communication process. And all three of these financial statements are interconnected. What does that mean? It means you have to do them in a specific order, because one financial statement is going to lead you to the next. And again, at the start of class, we talked about the importance of coming prepared to class. And I had a list of what that means. And one of the things being prepared means is that you've read the chapter. Okay, now we're practicing the chapter. And then pretty soon you're going to be studying the chapter. You're going to be doing homework. So these three financial statements are critically important. We're going to use them in every chapter from here on out. We need to invest the time today to learn them, to commit them to memory. Okay, so there are three. each financial statement is going to have a 3-part heading. I call it, the way that this brain remembers it, and again, I have a 56-year-old brain, is who, what, and when. So the first 3 lines of any financial statement, I remember who, what, and when. So who's going to be the name of the company? What is going to be the name of the statement? And the when is going to be either the time period covered or a specific date, depending on which financial statements you're doing. And so here's the 3 financial statements that we're going to practice for the balance of today. They have to be done in this order because they're interconnected. What I do on the income statement is going to feed the next statement. And what I do on the statement of owner's equity is going to feed the last statement. So they have to be done in this order. I want to make sure that these are in your notes. If I were studying for this class, I'd be making an index card because that's how I study. And my index card on one side would say heading of a financial statement. And then on the back, it would say who, what, and when. And then I would have an index card for each one of these. And on that index card, I would write down what's on each one of these statements. Why do I do index cards? Because this book is heavy. And when I go in a place where I have to wait, whether it's a grocery store, whether it's a gym, definitely at home when I'm on my treadmill, I like to bring in a small stack of index cards, and I have a little ring. I don't think I have them in my office upstairs here. You can buy rings for about 5 cents at Office Depot, and I put a little ring on each chapter. And as I learn these index cards, I take them off the ring. So what's left by test day is the ones I still don't know. Those are going to be the things that I focus on. I would encourage you guys to think about studying with index cards. I have them all over my house. Here's a big stack right here. And that's how I study accounting, always. I get an index card and I write a concept on one side and a definition or a problem on the back. And I look at them every chance I get that I can build some study time into my day. So here's the income statement. It's always done first. It shows the results of operations. Okay, in a nutshell, it's going to show whether the company earned a profit or not. So here's what it shows, and then we'll go get our hands dirty. It shows total revenues, total expenses, and the resulting net income, which we just saw, or possibly a net loss. How would a net loss occur? That's what happens when your revenues are smaller than your expenses. That's what happened to a lot of business owners during this past year. They ran into a lot of net losses because they didn't have revenues coming in. Older accountants refer to this sometimes as a P&L, which stands for profit and loss. It's a slang term, but there's a lot of accounting people, as well as QuickBooks, still refers to it as a P&L. And so how does it look? Well, you're going to list the revenues and total them up. You're going to list the expenses and total them up. And your last line is one of 2 things, either a net income or a net loss. And I gave you guys a handout that had examples of this on it. It's in the modules link, and it looks like this, because I want you to see what they look like. So here's the first one. There's 2 columns to put the numbers in. The way that I would remember what goes in what column, details on the left, totals on the right. In other words, this company only had 1 revenue account. So it'd be silly to write it in fees, income, and then total revenue. That's a total, so that goes on the right. This company had 2 types of expenses. They detail them on the left, they total them on the right. So this company generated a net profit of $38,350. This is from your textbook. I made it into a handout just so I could put it on the screen. So was this company profitable? They absolutely were. They're profitable because their revenues were greater than their expenses, What does that profit do? It gets carried over to the second statement, which is called a statement of owner's equity. Okay, remember there's 3 financial statements. An income statement, that was the first one. The second one is a statement of owner's equity. It's going to show how the owner's net worth changed. As an owner, our hope is that each month our worth goes up, but that doesn't always happen. Let's see what happened with Eli here. Eli is the company that they demonstrate in the book in chapters 1 and 2. So Eli started with 100,000 invested in his company. 2 things happened to change his worth. They were profitable, right? That pulls his net worth up. And I want you to notice where that number came from. That came from the income statement. That's why the income statement had to be done first. And then money that he took out for his personal work, for his personal business to feed his family, make his house payment, that pulled his equity down. That's an example of a withdrawal. A withdrawal is when a owner takes money out of the company for his or her own personal use. Owners have families to support. So they take money out, kind of like Cerritos College pays me. But in my own business and my CPA business, I take a draw every month to help me pay my personal bills and sometimes to invest. So this owner took out $5,000. That means the difference between those two caused his net worth to go up by $33,000. So he ends his ending capital with 133, 350. We're going to do this. Right now, we're just kind of previewing what's ahead. I am not a fan of just looking at PowerPoints. We're going to go get our hands dirty and do this for ourselves in just a minute. But right now, I'm showing you how these financial statements are linked. They're interconnected. One statement feeds the next. Let me hear any questions that you may have.
I have a question.
Sure.
Why wouldn't the owner, just out of curiosity, consider it a salary and put it on the income, like pay himself a salary?
So that's a really good question, Brandy. Really good question. We're working in this class with the sole proprietorship, which is a one-person owned business. It's a great question. If you had a corporation and you wanted to set up your entity as a corporation, you could pay yourself a salary and you could put salaries expense on there. But in this type of a sole proprietorship, which is what this class covers, you take out money out of the business to go use for your personal expenses. Really good question.
Okay, thank you.
Anybody else? Brandy, just so you know, when I set up businesses now, I set them up as corporations, mostly for liability reasons. I use a special type of a corporation called an LLC, or a limited liability corporation. And when you do that, there are different ways that you can treat that drawing. You could set it up as a salaries expense. Any questions on that second one, that statement of owner's equity? And what that's showing you is what happened to the owner's worth over the course of, in this case, 1 month. I think most of us would be really happy to see our net worth jump by over 33,000 in the period of 1 month. Some of us would love to see that happen in a year. And then the last financial statement is called the balance sheet. And it's exactly what the name implies. A balance sheet is going to prove that that accounting equation is balanced. So it's going to list the assets and it's going to list the liabilities and equity, and it's going to prove that the two sides match. Okay, so again, the important thing is this is a way of summarizing and communicating the data. This is what we would send to our bank. This is what we might send to the IRS if they request it. This is what we would send to a partner of ours if we had a partner. So not that ugly spreadsheet that we just did. We would have to take that spreadsheet one step further and summarize the results in these 3 financial statements. So we're going to work our way to that. We're going to spend the last hour of class practicing the preparation of these financial statements. Why? Because they're used in every single chapter. They're foundational. We're going to use them from here on out. And not only that, you guys will use financial statements in any class that you take. So any questions on what those 3 financial statements show? Okay, let's jump in then. Let's go back to our spreadsheet that we were working on. Let's go back in and take a look at exercise 2-6. So we've done 2-5. We did that earlier. Now let's go take a look at the next tab over, exercise 2-6. And they gave us selected information on this one. That means they didn't give us all the accounts. They gave us some of the accounts, and they asked us this question. I'm going to make this bigger so you can see it. It says Technology World had the following revenues and expenses during the month ended July 31st. Did the firm earn a net income or a net loss? In other words, they're asking you, was this company profitable or not? That's usually the first thing an owner wants to know. Okay, well, profit by definition is the revenues minus the expenses. So when they ask us, did they generate a net income or a net loss, we need to take a look at this and figure this out. They gave us selected accounts. I'm going to go through each one of these accounts and I'm going to write down, was that a revenue or an expense or neither? Sometimes they'll sneak in little accounts there that don't belong on the income statement. So let's see, fees for computer repairs, that would be a revenue, right? This is a technology world. They're in the business of buying and selling computers or generating computer services here. That would be computer repairs. That would be a revenue. This is an expense. This is an expense. This is an expense. But the fees for printer repairs, that would be a revenue. And then utilities, that's an expense. So were they profitable or not? Well, what I'm going to do is do an income statement. We're practicing how to do these financial statements. So I don't think this question specifically asked us to do an income statement. I'm always about practicing. So let's do an income statement. We're going to do the who, what, when, and we're going to have 2 columns to put the numbers in, just like you saw. So let me head this up properly. The who would be technology world. So I'm going to write over here because we're learning who, what, and when. Let me make this bigger so you can see it. The who is technology world. The what, this is called an income statement. The when, this is the part that people miss. For an income statement, you must define the period of time. This one specifically tells us that this was for a month. So on the when, I'm going to put month ended July 31st. If you don't put that, then the user doesn't know if this information is for a month, a year, a quarter. So we got to tell our user how long this information is for. And then I'm going to have 2 columns of numbers. It doesn't matter where you put your columns. I'm going to put some lines in just to show you that there are 2 columns here. If you're not sure how to use Excel, don't worry about putting the lines in. And all I'm going to do on this income statement is I'm going to list the revenues and then I'm going to list the expenses. We're going to put details on the left, totals on the right. Well, I had 2 revenue accounts here. I had fees for computer repairs. And I'm going to make my columns a little bit wider so that can fit without bleeding over. And we had fees for printer repairs. Those are details. There's more than one. So I'm going to put them on the left, 93,600. and 13,460. I'm going to total those up. And here's the revenues that I've generated. Whenever you total something, you need to put a single underline to show the user that some totals are coming. So whenever you total, and it's hard to see it on that handout I gave you, whenever you total something, put a single underline. If you can't see that, let me draw it in darker. There's a single underline there. And then the next thing I'm going to do is I'm going to list my expenses. So how do I list my expenses? It doesn't matter what order you want to put them in. I think we had 4 of them, 1, 2, 3, 4. So right now I'll just go ahead and list them in the order that I see them. So I have advertising expense and salaries expense. And telephone expense. And utilities expense. These are details again. So they're going to go on the left, and then I'll total them up and put the total on the right. And I think I might snip this and drag it down so I don't have to keep making you guys scroll up and down. So give me 1 second. I'm going to snip this really quick so I can drag it with us. And let me put it out here so we don't have to keep scrolling our eyes back and forth. I'll shrink it a little bit. There, that will help me. So that's what the book gives us. Now I'm getting this ready to be in a formal presentation that I can send out to whatever user needs the information. So advertising was 16.2, salaries was 41,000. The phone expense was 2160. The utilities expense was 3420. I'm going to put a total line in. I'm going to total up those expenses. And you can now see that I can now answer the question on whether this business was profitable or not. Since the revenues are greater than the expenses, this business was profitable to the tune of, so I'm going to call this net income because I see that my revenues are greater than the expenses, and I'm going to let Excel do the math. I'm going to click the revenues and hit the minus sign and then click the expenses, or you can do it on your calculator. Double underlines to show the user that I'm done. My statement is finished. So was this company profitable? The answer is yes. They generated 44,280. So details I want to point out to you because we're new at this, right? Single underlines are used where we're adding up some numbers. So there would be 3 of them here. 1 double underline on the income statement is used at the bottom here to show the user that we're done. It's finished. It's ended. And then the last detail that your author doesn't really harp on too much, but I want to start creating good habits from the very start. Dollar signs go on income statements. In fact, dollar signs go on all financial statements. Here's where they go. On the first line in each column, so that would be here and here, and always on the last line. So up here someplace, pay attention to the details. You want to know where single lines are needed, where double lines are needed, and where dollar signs are needed. So pay attention to those little details. That's always the first statement. why that number, if they asked us to do a full complete set of financial statements, that number would transfer over to the statement of owner's equity. We'll do one of those in a minute. Questions, because that's our first financial statement. I expect there to be questions. All right, we just did the income statement so far. Let's go try a whole set, right? The income statement is probably one of the most important ones to owners, but we want to see a complete set of financial statements. So I guarantee you guys that on your next test, there's going to be a question that asks you to do a set of financial statements. It's 10 points. So just in today's lecture, we've done one 10-point problem that asks us to record the transactions in columns. And now we're going to do a second 10-point test question that's going to say, complete a set of financial statements. And so it's twofold. It's 2.8 and 2.10. Here's 2-8 and here's 2-10, and they are connected to each other in the book. So I think, Maria, this might be the question that you were asking about. And you know what I'm going to do? I'm going to blow this up so that I can see it a little bit better and you guys can see it a little bit better. It's very difficult to keep everything on one spreadsheet, but let me read it first before I get rid of it, before I blow it up. It says, at the beginning of September, Helen Rojas started Rojas Wealth Management Consulting. So that's going to be the who, right? So I'm going to write down, there's the who, because all financial statements need a who, a what, and a when. So that's the who. She is doing financial planning and gives advice about investing and managing money. On September 30th, okay, that's the when. This is going to be as of September 30th. It says the accounting record shows the following information. On this one, they just want an income statement. Okay, on this one, they just want an income statement. But if you go to 2-10, one tab over, it's going to say use the same data. Now we want you to do the rest of it. It's statement of owner's equity and a balance sheet. So these two are connected. So I'm going to blow these numbers up because to make it a little bit easier for me to see them. And so I can try and keep it as best I can on one screen. Let's see. That's not going to help me too much. Edit, copy. Let me blow them up here. That might make it a little bit easier on our eyes. And what we're going to do is we're going to do an income statement. And then on the next tab, we'll do a statement of owner's equity and a balance sheet. So for learning purposes, you guys would not write this down on a test, but because we're learning, I'm going to write the who, the what, and the when. In fact, I need to left align these. So who on the top, what, and when. Okay, now the who, I got to go look again because it was a long name. It was the it was the Rojas Wealth Management. Let me write that in. Rojas Wealth Management. That's the who. The what, this is an income statement. And on the income statement, the third line has to define the period. They specifically told us that this was for the month of December. So my when, my third line, is going to be for the month ended. Not all caps. I accidentally hit the caps button. Month ended September 30th of whatever year. Okay, now income statement shows two types of accounts and two types only. Revenues and expenses, and that's it. Revenues, expenses, and that's it. So if I'm looking at my little chart here, I think I may have seen the chat room. I'll go answer that in a moment. Here's the revenues, and here's the expenses from here to here. That's going to be what goes on my income statement. Let me go check this chat room comment out because I don't have Giselle here. Okay, somebody needs to leave. Totally understandable. Maria, email me if you get stuck. I know you got to leave. Okay. Okay, let's go do this income statement. So what's on an income statement? Only revenues and expenses. I'm going to write this down for learning purposes. You guys don't have to write it down, but I'm going to write it down. The income statement shows only revenues and expenses. That's it. That's the only thing that goes on there. So we're zeroing in on these 4 accounts. So first thing I'm going to do is list my revenues. I only have one account here. It's called fees income. And Diego brought up a really good question. Fees income, that's much better stated because the word income is in there. Since I only have one revenue account, I'm going to go ahead and put it in the total column. Remember, details on the left, totals on the right. But since I only have one, I'm going to go ahead and put it in the total column. So 311,600 is the amount. Let me make my columns a little bigger so these will show up. And then I'm going to list my expenses. I have 3 of those. Withdrawals is not an expense. Okay, not an expense. It's a reduction of equity. It does not go on the income statement. It's a reduction of equity. Instead of putting money into the business, the owner's taking money out of the business. So I'm going to list these 3. Advertising expense, let me spell it right. And then we had salaries expense and telephone expense. And then I'll total those up. So details on the left, totals on the right. I won't worry about the dollar signs until I'm done. That's like cleaning it up. Right now, I'm more interested in getting the numbers right. Okay, so let me put those 3 accounts in there. 26,000, 64,000, 3,200. I'm going to put a single underline to total those 3 up. And either with your calculator or with Excel, you can do that. And another total line because I'm getting ready to perform some math. And my last line here is going to be one of 2 things. It's either going to be net income or net loss. That's the only 2 choices you have, net income or net loss. In this case, since my revenues are higher, this number is a lot higher than the expenses, I have a net income. I'm going to take the difference between those 2. So this answers the question of, was the business profitable? The answer is a resounding yes. A lot of us would love to make that much money in 1 month. Okay, this is a very profitable business. The owner brought in revenues of over 300,000 and she spent 93,000 something to run the business. Her revenues outpaced her expenses by a lot. Okay, so if I'm the owner, I'm like celebrating, right? I'm going to get myself a caramel macchiato. That's how I celebrate, from Starbucks with extra drizzle. You guys know I have demons. That's one of them. Questions on that income statement? Okay, then we're going to move over to 2-10 and it's going to say, do a statement of owner's equity and a balance sheet. We got to remember this number, write it down someplace. That number is going to be carried over to do our statement of owner's equity here in a minute. Okay, so let me go then 1 over to 2-10 as soon as I make sure there's no questions. Any questions from anybody?
The financial statement is basically a table, not an actual sentence that we write, or
I guess you could look at it as a table. It's 2 columns for sure. And so sometimes when people see columns, they use the word table. When I use a table, I think of Excel and sorting table. So to me, it's not really a table, but it's set up in a columnar format. It's nice and neat. We make sure we don't have spelling mistakes. I'm a terrible speller. So we would check this over to make sure we don't have spelling mistakes. By the way, when you're in Excel, the F7 key is one way to check for spelling mistakes, just to add that to your toolbox. The second statement is the one that trips students up. It's the statement of owner's equity. So we're going to go do a statement of owner's equity next. And I just, again, moved the information over. It's the same problem that we just did, making sure, yes. And now they want us to do the last 2 statements. They want a statement of owner's equity and they want a balance sheet. So again, I'm going to refresh my memory for learning purposes on the 3-line heading. So I'm going to put in here who, what, and when. And now I'm going to fill them in again. So Rojas is the who, Rojas Wealth Management Consulting is the who. And I'll center this. If you guys want to know how to center, you can use this merge and center button up here to put it right smack dab in the middle. And the what, this is a statement of owner's equity. And the when, this is again, same heading as the income statement as far as the 3rd line goes. This is for the month ended September 30th of whatever year. Okay, how are we going to do this? We're going to do details on the left, totals on the right. Details on the left, totals on the right. Okay, remember what this one shows. And again, for learning purposes, I'm going to write in what this shows. You wouldn't actually physically write this on your answer, but in the interest of taking notes and walking you guys through the steps, this statement shows how the owner's net worth changed over, in this case, it's over a month. So I'm interested in showing the user what the owner started with and what she ended with. Okay, so first line on a statement of owner's equity is you list the owner's name. This is Helen Rojas, and it's her capital account. And this first capital account is as of September 1st. And it shows us over here, we make that a little bit bigger so our eyes don't have to be as strained. It shows us that she started off with 106,800. That's my starting point for this statement. That's what she began the month with. One thing pulled her up and one thing pulled her down. What pulled her up is the fact that she was profitable. So I'm going to write in add net income, and that would come from that previous statement that we just did, that green number. So if I go back and I look at that, we were profitable 218,400. And I'm going to put where that came from for your notes, from the income statement. So the reason we had to do that income statement first was because we need it on this second statement. I'm going to put that in green so you know that it came from the green box before. That pulled her up. That increased her worth. What pulled her down was that she took money out of the company to feed her family and to pay for her personal expenses. That's what we call a withdrawal. She took out $36,000. So that pulls her net worth down. Those aren't business expenses. That's why it's not on the income statement. That's her own personal stuff. So when the owner puts money in, the capital account goes up. When the money comes out, the owner's worth goes down. So what happened to her over this month? She wound up having an increase in capital. That doesn't happen in all months, but it happened in this month. How much did her capital increase by? The difference between these two. So on your calculator, go ahead and take the difference between those two numbers. I'm going to put a single underline because I just performed a math operation. And your last
teacher?
Yes, ma'am.
I'm sorry. Is it 218,000 or 81?
Oh, thank you. You caught me. Let me go check. 218,400. So Brandy, you just caught out one of my major issues, which is transposing numbers. So thank you for calling that out. It is 218. I transposed the 1 and the 8. Yeah, I was trying to give her an even better month than she had on her own. So 218,400 is right. Good job. She took out 36,000 for her personal use. So that makes her increase 182,400, the difference between these two. Last line is going to be her name again, but this time it's going to be as of September 30th. This is what she ended the month with. And I'm going to sum up those two numbers, her starting point along with that increase. And when I add those two up, I will have her ending capital. Okay, let me put a single and double underline around that. And so I'm going to make this green also because that's going to feed our balance sheet. So again, I'm going to put a star on this. Out of the 3 statements, this one causes the most grief. I think people have trouble remembering what goes on it. And if you have trouble remembering what goes on it, this is the point where I would make an index card. And on one side of the index card, I'd have SOE, Statement of Owner's Equity. And on the flip side, I would put beginning capital plus net income minus withdrawals. And I would keep practicing that statement until I have committed it to memory. So most of us would be jumping for joy if our net worth started at 106,800 and ended at almost 290,000. That's in 1 month's time. We'd be turning cartwheels. So here's what I want to point out to you. We need to use up all of these accounts. And I know, well, one of the Marias had to leave. I'm not sure it's the Maria that asked the question. So our goal here is we got to put every single one of these accounts in a financial statement. So we put the revenues and expenses here on the income statement. We used the capital along with the withdrawals on the statement of owner's equity. You just saw it used. And so what's left then, what we haven't yet used, and I think this might have been Maria, what you may have been asking, we haven't used the assets or this liability account yet. We have to now prove that the fundamental accounting equation is in balance. And so our last statement, this balance sheet here, remember they asked us to do 2 things on this one. They asked for a statement of owner's equity, which we've done. And now we want a balance sheet. Here's why they call it a balance sheet. We're proving that the assets equals the liabilities plus the equity. That's going to be our last statement. So we're going to scroll down a little bit and we're going to create that balance sheet. And Maria, if it wasn't quite this question, it will definitely be the last one that I do today. Okay, so we're ready to do our balance sheet. So a balance sheet is done to prove that this accounting equation is in balance. So let's go ahead and do the who, what, when again. And you'll notice that if you're using Excel, it's going to remember the lines. It'll put them in for you probably. When I put Rojas, I don't know why it's doing it small. When I put Rojas Wealth Management, I thought it might remember it, but no. So I'm going to change this font on these 3 rows to be higher. I don't know why it made it smaller all of a sudden. So let's get the who, what, when. This is Rojas Wealth Management Consulting. You guys can also copy it down if you would prefer. This is a balance sheet. It's not a balance statement. It's a balance sheet. And here's what I want to point out. The third line is different from the first two statements. A balance sheet is a snapshot. It's a picture at a specific moment in time, right? So I'm going to show everything as of the close of business on September 30th. To keep Excel from turning this into a formula, use the space bar before you type in September 30th. I put a space in first. September 30th, whatever year. Okay, you notice it doesn't just, it doesn't say month ended like the first two said. It's a snapshot. On September 30th, this is what our assets look like. This is what our liability looks like. And this is what the owner's net worth was. All right, so this is going to show, I'm going to write it out to the side. Remember what we're showing. Assets equals liabilities plus equity. So first thing they want me to do is to list my assets. Those accounts are right here. Assets are listed in order of liquidity. I'm going to write that off to the right. List the assets in order of liquidity. What the heck does that mean? How quickly you can convert them to cash. So cash is always, always, always first because cash is already cash. Accounts receivable is very liquid. I could go sell those at the bank. It'd take me about 10 minutes. So accounts receivable is very liquid. And then office supplies and equipment. Office supplies I could take back, take me some time. Office equipment is the least liquid out of those assets that you see because some of them might have title issues. Okay, so don't worry too much yet about the order, but they are listed in order of liquidity. How are we going to do this? Details on the left, totals on the right. So I have four assets: cash, accounts receivable, office supplies, and office equipment. I'm looking directly at our chart here that the author gave us. We could move it down. It will not move down all of the notes I've written though. Cash was 132,400. And Brandy, please keep an eye on my numbers without Giselle here. Make sure I don't transpose them. I so appreciate you catching that. 13,600. By the way, if Brandy would not have caught me, my balance sheet will never in a million years balance. So I'm thankful Brandy caught my transposition error. If she didn't, we would have had an unbalanced balance sheet and I would have had to go back and search for your answer. So that's why I never want you guys to hesitate to ask a homework question. If you're out of balance and you've tried it for 10 or 15 minutes, don't pull your hair out. Get in contact with Giselle or myself and we can help point out the mistake. So let's total our assets up. I'm going to add up those four. I'll wait for you guys. Single underline to show the user that a total is being created. Oh, by the way, I didn't put those dollar signs in on the last one. So while I'm thinking about it, they go on the first line in each column and on the last line. And they'll go here on the first line in each column. And also on both sides of this equation, there will be a double underline. So might as well take care of that now. Here's the dollar sign on the first line in each column. And double underlines under the assets because there's the left-hand side of the equation. Okay, we can show the user that we got the left-hand side down. What's left then is the right-hand side of the equation, the liabilities and the equity accounts. So I'm going to write my heading here. Now I'm going to show my debt. Nobody likes to do this, including myself. I don't like thinking about my debt, but it's important that we manage it. Now I only have one payable account. So because I only have one, I'm going to put it on the right-hand side. So I'll go ahead and type in accounts payable, 22,800. And we should be checking these off as we use them. Remember, every single line item there needs to be shown in the financial statements. And so here's where the magic comes in. The last thing I need is my owner's equity. Don't take it from the beginning information. The whole reason we did that statement of owner's equity here in green is to compute the ending capital to balance out the balance sheet. So that green number there is going to be entered here. We've already calculated his or her ending worth. This is going to balance out our balance sheet. So we're going to write in Helen Rojas capital, and we're going to drop in that green amount. I'm going to go grab it from up top. We've already computed it. It's what we did on the second statement. And my last thing is going to be to add those two numbers up, and they must balance back to the total assets. Okay, we're proving that our accounting equation is in balance. So total liabilities and equity.
Professor, can I ask a question?
Sure, you may.
So on I mean, does it matter? I know it still calculates and all, but just as I'm just kind of used to looking at it on the book and that printout as well, how the liabilities are on the right side.
Oh,
I mean, does it really matter? I know we're listing these, you know, underneath, but does it matter whether it's on the side or not?
excellent question, Janet. So there are two forms of a balance sheet. The one that Janet's referring to is called an account form. Let me go show you what she's asking about. She said in chapter 1, they're showing a balance sheet that's listed side by side. That's what's called an account format, and your author will tend to use that in Accounting 100. What's going to happen in the next chapter is he's going to change to what's called a report form, which just shows it vertically. And that's honestly what probably 90% of companies use as a report form with a vertical presentation. So to answer Janet's question, either one is acceptable. I could have put liabilities and equity over here on the right-hand side. This is, I'm so glad Janet asked that. This is what's known as a report form of a balance sheet. The other one that I just showed you is called an account form. So I think your homework is probably going to use both. If it doesn't, the second form, the one I'm showing you, will come up in the next chapter. I'm glad you asked that. So
Thank you.
Yeah, you're welcome. Thanks for the great question. Let's add those two items up and make sure that we balance out, because if we have a transposition error like I made earlier, these would not have balanced, and I would have had to spend some time going back and finding my mistake. So I want to show you that those yellow numbers there just proved that our assets are equal to our liabilities and equity. So dollar signs, first line in each column and on the total. It would look like that. That is a complete set of financial statements. That's what you're going to be doing for the next 10 chapters. It can be a little overwhelming. This chapter can be a little overwhelming. So that's why we spent 2 full days on it. And we're not done, because you got to practice, practice, practice. You got to commit the form of this to memory. How do I do it? How do I remember it? I go back to the fundamental accounting equation. So remember that assets equals liabilities, and then we have this equity umbrella. And under this equity umbrella, we have the capital, the revenues, and the expenses. So here's how I remember. I don't know if this will help you or not. Here's how I remember it. My financial statements go from right to left. It's kind of weird because we're used to reading from left to right, but my financial statements do this. My first statement is the income statement. That's revenues and expenses. My second statement is the statement of owner's equity. That's what's going to show what happened to the owner's net worth. And then whatever's left, what hasn't been disclosed, is going to be my balance sheet, which shows that my assets equals my liability plus the equity that's been computed on that second statement. So I don't know if that helps you or if you have your own way of remembering how to do the financial statements, but I take everything whenever possible back to that accounting equation that we're going to be using throughout the semester. So let me stop because that's a lot of information, a ton. Give you guys the chance to ask a question because you guys are asking some excellent questions. If we go back to the first chapter, there was a definition that I really impressed upon you guys. I wrote it in the notes. I highlighted it in the notes I sent you today. Accounting is the process of recording, classifying, summarizing. This is what we're doing. Summarizing and communicating the information. So yes, we're going to be recording lots of transactions in columns and in tomorrow T accounts. But the end result is that we got to communicate the information to users. And the way we do that is through those 3 financial statements. You have to do the financial statements in order because they're interconnected. That means one financial statement feeds another one. And so again, what we just practiced today is an income statement which shows profitability. It shows only 2 types of accounts, revenues and expenses. That's the first statement. We did it first because the resulting net income is going to be used in the second statement. The second statement, and I would say the one that gives students the most headache, and that's why I would star it. I would practice it a little bit extra. The second statement is the statement of owner's equity. It is of most interest to the owner, and it shows the change in owner's worth. Okay, actually, really nobody cares too much about that statement besides the owner. He or she wants to see what happened to her net worth. We had a brilliant young lady in this last example who increased her net worth substantially over the course of 1 month. And then the balance sheet is the snapshot. It's the snapshot on one single day. It's the snapshot of assets equals liabilities plus equity. It shows that that accounting equation is in balance as of a specific date. Let me tell you why that last one is just as of a specific date. If I tell you my cash account balance today, right now, at the end of today, my cash balance is going to be different tomorrow because I'm going to pay some bills and I might go to Starbucks. Who am I kidding? I will go to Starbucks. I'm a weak person. So my cash is going to be different tomorrow. So that balance sheet, take a picture in your head. It's a snapshot at a specific point in time. That's a lot to absorb. You're going to have to do 2 or 3 of these before you feel comfortable with it. What I give you for homework is the minimum amount of practice that I believe is necessary for you to master the concepts. If you need more practice, you can go to the ungraded practice. That's 0 points, but you can go in and do as many of those as you want in preparation for a test. Any questions before we just take a glimpse at our last problem? And Maria, if that last question didn't answer it, I'm definitely going to answer it on this last problem. Okay, let me go make sure there's nothing in the chat room. I really miss Giselle, but she is working for a good cause today. Okay, then last one, and this one is a little bit confusing. Maria may have been asking me about this one. We're not going to do the full financial statements. We'll do a quick and dirty version here because I think you guys are pretty tired out. We've covered a lot of new stuff today. So I'm not going to physically do all 3 financial statements, but we'll talk about how to approach. It says the equation below shows the transaction of Catherine Proctor, attorney and counselor at law, for August. Okay, so again, we're going to do financial statements. This is the who. The what would be the name of the statement, and the when would be for the month of August, month ended August 31st. The law firm is owned by Catherine Proctor, and they give us some completed transactions. What they want us to do is they want us to do the financial statements. Okay, remember when I wrote out that equation earlier? I said that we're going to start from this side and work our way over. So step 1 is the income statement. It's going to show whether the company, whether Catherine Proctor's attorney firm was profitable. So here's what I'm going to ask you guys right now, and it's okay to be wrong. I am wrong a lot. You saw that happen today. I learn from things when I'm wrong, so it's okay to be wrong. Do you think this attorney firm was profitable? Yes or no? What do you guys think?
Yes.
Okay, Janet, you're right. And the reason is because the revenues are higher than the expenses. So your job, first job, is to do an income statement. And your income statement is basically going to look like this. It's going to be fees income of $10,800. And then we're going to have to itemize the expenses. Okay, I don't know if you guys heard me last time, but it's always wise on the expense line item to go out to the right-hand side and write down what kind of an expense it was. So when I do my income statement, there's my fees income. Okay, I have my revenue down. My expenses, I got to itemize. So this first one here was for utilities. I can see over here there's a notation. The next one, the next expense is for salaries. And the last item in there is for a telephone bill. Right? So when you do your income statement, you're going to have fees income, $10,800. You're going to take out these 3 different expenses. You'll calculate your net income as the difference between those revenues and expenses. Let me do that right now. You can do it with me. 10,800 minus 6,480. I got 4,320. That's going to be the result on your income statement. Okay, the second statement, and I'll give you a snapshot. I'll let you guys take a picture of this answer if you want, since I'm not going to completely do them in class. I'll bring the answer over for you to look at. The second statement, probably the most difficult one for most students, is how did Catherine's capital change? Okay, well, here's her beginning capital, 23,200. Remember, there's usually one item that pulls her up, the net income, and one item that pulls her down, the drawing. She took a drawing, $1,200. So a little miniature, quick and dirty statement of owner's equity is going to look like this. Beginning capital, 23,200, plus the net income, 4,320, less the withdrawal, is going to give you her ending capital. So let's do that real quick on my calculator. 23,200, what she started with, plus the net income, 4,320, less the withdrawal of 1,200. You guys can double check me. I got 26,320 when I did that. So I would say she had a pretty good month. Here's what she started with. Here's what she ended with. And then your last statement, let me stop and take any questions. Give a glance over at that. If you can't come up with it, go ahead and yell. I'm going to look at something I need to look at while you guys take a look at that. If you have a question, go ahead and ask. And if not, then we'll attempt a quick little balance sheet, or at least we'll talk about what's on it. Last thing, so we've used up the right-hand side of our equation. We used up the capital. Here's what we're left with: the assets, the liability, and the ending capital. So our third statement is going to be the balance sheet. 1 second. I have somebody at the front door and I can't get it right now. Okay. Last part, we're going to show assets. We have 1, 2, 3, 4 assets. So here's our cash. And Maria, this may have been your question. You're going to list your cash. You're going to list your accounts receivable, list your supplies, list your equipment. There's your total assets. Then for your liabilities, we owe 600. And here's the ending capital. We already figured it out. So let me show you what those financial statements are going to look like. I'm going to pull the answer over here in front of you. If anybody wants to take a snapshot of this, you're more than welcome to. If Giselle was here, I'd have her take a screenshot. But let me show you what these formal financial statements are going to look like. I'm going to bring them over here. Make it bigger so you can see it. If you guys know how to take a snapshot and you want to put it in the chat room, that would be awesome. If you don't worry about it. I'll make sure it gets into the notes. Here's our income statement. We got the right net income. We quick and dirty, we did the net income. We got 4320. Here's that statement of owner's equity that shows what she started with and what she ended with. I think that matches the number that we came up with. And so the last part of that is going to be a balance sheet. I'm not sure what happened to my tabs. Let me make this a little bit bigger. Here it is. Here is our balance sheet. I'll make it bigger so you can see it. Janet asked a really wise question. This is an account format. It's shown side by side. You saw me in class demonstrate a report format, a vertical format. Either one's okay. The vertical format's used most often in business. Remember what we were showing here. We were showing that assets equaled liabilities plus equity. That capital line item came from the statement before. So that's a lot of new stuff. Lots of new stuff. It is kind of like a foreign language. We said that accounting's the language of business. So if you guys want to take a snapshot or a picture even with your cell phone, or I'll go post it in the files, that way you'll have a model to look at. Does anybody have any questions on anything we've talked about? Okay, here's what I need you guys to do then. I want you to finish the chapter 2 homework if at all possible. It's not due until this weekend, but here's the deal. If we don't understand chapter 2, we can't go on to chapter 3. So if you don't have time to complete chapter 2, at least get your feet wet. At least try like half of it. Because when you walk in tomorrow, you should be into chapter 2 and you should have read chapter 3. Don't feel bad if you're really confused after reading chapter 3. My job as an instructor is if you read it, you're going to come in a little bit confused, and my job is going to be to make that confusion go away by practicing, and answering any questions that you may have. So the last thing I want to show you before we leave here is what I started off showing you, our schedule, right? Here's our schedule. We're going to be working on chapter 3 tomorrow. Do your best to at least start chapter 2 and read chapter 3, because we have our first test 1 week from today. Summer classes go 3 times as fast. We cover this week what a normal class would cover in 3 weeks. So you can do it. I know you can do it. And I'm here to help you every step of the way. And so is Giselle. So get started on that homework and don't hesitate to reach out for help if you need help.